Hi everybody, Alex here from Expert Forex, and in today's video we're going to be talking about the important lessons that you can learn from Forex Robot trading failures. Now this is most probably one of the biggest distinguishing aspects of trading that distinguishes winners from losers. Losers will look at failure and just walk away from it. Winners take that failure and they say, what could we have done to avoid this? And they would analyze that failure in a big way, and they would find solutions for the future. So many traders, manual and automated traders, lose the advantage of turning failures into winning situations by just saying, oh my goodness, this robot is like a lot of rubbish, I'm never going to touch it again, and just walking away from their failures. So let me take you through a typical process that shows this in action. Okay, so on your screen you can see an FX Blue analysis of a trading account. It is a real trading account and it has made $1,000 of profit, but unfortunately the floating loss is 1,700. So our equity is right down to $400, which is a loss of 61%. Quite a disastrous result, and it is the US CAD that we're trading. So the typical case here would be that the trader will walk away from this, close this account, and never think any further about it, and blame possibly a bad currency selection or bad settings as a result of that. So let's go and have a look at, firstly, why has this happened? So in order to do that, let's analyze what's happened here, and I'm going to go into the orders and I'm going to say, when did all of this start? So it started on the 31st of August. That's when the first transaction happened. Remember that date, the 31st of August, and today's date is the 25th of September. So we've got a start date and we've got an end date for this trading. So the next step is to look at the chart to see why this loss was incurred, and there we are. Here's the US CAD. It's the 4-hour chart, and it's from we said the 31st of August, and let's just move that along. 31st of August. All right, so it all started over there. And I'll make this a little bit thicker, and it all at the moment is over here where the trend is downwards on the CAD. So the GTM does not like trends. So it started out with a nice upwards trend, not so good for the actual results, but then it came back, and that's when the GTM is really strong. If it comes back to more or less the starting point and that kind of thing, it actually makes money. But after that, it just trended downwards and downwards and downwards and downwards. So that is one of the main causes of this dilemma that we're in. And if we look at the distance of this trend, we're looking at a trend of about 900 pips. Huge trend that has happened here, and I'm surprised this account is still alive after a almost 1,000 pip trend. So all right, so now we're starting to understand why this has happened. Basically, we thought that at the time that the CAD would be trading sideways, which it did. If you look at it, that was a sideways market, but after that it started trending, and that's when the damage was done. That step one is just to look at the chart and find out why this is in fact happened, and it's because of a 900 pip trend. Now we can confirm that by going back to the FX Blue statement, and we can have a look at the open trades, and I'll just go to the open trades, and we can look at the worst one, and there we are, 900 pips. So that's a confirmation that what we see on the charts is in fact real, and there's the 900 pip loss that was suffered, or that is currently being endured, let's put it that way. All right, so that's number one. We understand that the currency we chosen was a trending currency. So let's go and look at what happened using the strategy tester. And in order to do that, I'm going to dial into one of my other computers, and this one is somewhere else in my house, and I could do this by using a piece of software called AnyDesk. It is free. It is the most fantastic software to dial into other computers with. It doesn't take much resource, which is a big thing when you use these kind of software, because some softwares use so much resource that it freezes up the computer that you're dialing into. This one doesn't use much resource. So what we're going to do is we're going to actually back trade the grid trend multiplier for the Canadian dollar. We're going to use open prices. We're also going to use tick data, but open prices for now. And we're going to set the dates as we saw them as being, I think it was the end of August. So 31st of August last year to literally a few days ago. I just want to see how much data I've got till the 24th. I don't like doing the final, so I'm going to just go to the 23rd. So we're going to go from the 31st of August to that. So what I'm going to do now is I'm going to go into the EA, into the inputs, and put in the exact details that I traded the live account with. So I started with $1,000 balance, and then I go to the settings, and I try and do the settings exactly the same as what was set up in the live account. So here we go. The manual lot sizing is 0.01. Remember, we always suggest that you use 0.01 per thousand in your account. That's exactly what it is there. The gap size is 20. That is the gap size that was used for the balance setting for the Canadian dollar in the plug and play settings. So what I'm going to do is I'm going to use this automatic sell setting. So in other words, copy whatever's in the buy, copy it to the sell settings. So I don't have to, when I do that, all these settings will be copied into the buy anyway. Doesn't matter what is there, by chance it is the same, but it will ignore that and just copy those settings into the sell. Important setting that, because a lot of people think that if they disable settings, the sell is disabled, but it isn't, because you've told it, please copy the sell settings from the buy. So the buy says enable. Just an important one there. Let's just run this. I see there's no other settings. The GTM is actually very simple. It runs off very few settings. Okay, so now we just press OK. And what I'm going to do is I'm just going to run it on those settings to see what results I get when backtesting. Okay, so we're going to run it quickly, and let's see. We hit start, and let's see what happens. Okay, there it runs. Have a look at it. And interestingly enough, it says that if we had run those settings over that period, the profit would have been $16. Now, I know of one reason for that, is that I'm using a spread of 1 for this back testing. Let's make it more realistic. In fact, the live account had a spread of 3. So I'm going to just run that again, get a more realistic result with a higher spread. Okay, so now it's saying we would have made a small loss. Now it's interesting, the loss is in fact 600 on the live account. It's a little bit smaller there. Let's run those settings on the tick data. See what happens then. Now this will take a little bit longer. Okay, so it's all over now, and let's have a look at the results. And this is the tick data, and it's also showing a small loss, but nowhere close to the 600 that we've covered on the live account. So I'm not going to be too worried about that. There is a difference. You must just be aware sometimes the back trading gives better results than you would get in live trading. But the most important thing that we need to move on to now is, what do we do to improve these results? So let's go back into the settings, and here they are. So one of the settings I'm going to focus on is this counter trending scaling. So in other words, what it says is that when, let's say, there's a buy trend, you want your buy trades to have more or less the same grid size, but you want your sell trades to have much bigger grids because you don't want to open lots of sell trades. So this setting allows you to make bigger gaps for counter trend entries. So here we go. So we're saying only start applying that logic after you've reached a certain level of negative deals in a counter trade situation. So in other words, you can say, after I've had 3 negative deals, or I've got 3 negative opening deals, start applying a counter trade trending. So I'm going to test here, and this is optimization. I'm going to test from 1 to 6. How soon should I start with my counter trend trading? And I'm going to test here a percentage of 20. So in other words, the gap size will increase by 20, but I'll also test in jumps of 20 right up to 140%. So I'm going to test those 2 items and see if I had used those 2 items, whether the results would have been better. So let's click on OK. And what we now do is we click on optimization, because we want to start the optimization of those 2 items that I've clicked. Okay, so before I start on the optimization, I'm going to go away from tick settings because it will take way too long, and I'm going to go back to open settings. We've seen that the results were not that different, so open prices will be okay as a guide. Click on optimization and let's start it, and let's see how long this will take. We should get some feedback pretty soon. Okay, it says it's going to take 2 hours to do this one. That's a very long time. So what I'm going to do is I'm going to pause the video, and we'll come back in about an hour's time or so and have a look at the results. Just out of interest, already a lot of profitable settings coming out there, so let's just wait and let it run through. There are about 1,200 options that it's going to be testing, and let's see what it comes up with. Okay, the optimization is finished. It's not really moving anymore, and let's have a look at the optimization results. So what it says is that we could have improved profitability by $80 over the 46 minus, so we could have improved profitability by about $120 by using the counter trend gap size trading. So what we're going to do is just look at these optimization results in a little bit more detail. So it's basically saying at level 6 you should scale by about 60%. So what I'm going to do is I'm going to just load that in as input parameters, and you'll see that the input parameters have changed now. So there we are. Let's see if we can improve this even more, and I'm not sure if we can, but let's have a look. Now there's another pruning facility that says that pruning facility that's actually quite nice. It says the balance between buys and sells should not be bigger than a certain amount. So in other words, if there are 5 buys and there are 10 sells, the difference is 5. So you can control how big you want the difference to be between buys and sells, and what we want to do is test that, if that adds value. So here's the maximum gap between buys and sells open trades. I'm going to test that, and I'm going to test it from 0, in fact, to let's say about 15, just out of interest. And I'm going to run this as an optimization on its own. I'll untick that. So we're only running that optimization over there. It should be very fast. So before we run that optimization, I just want to make sure that the current settings produce $80 positive. Let's have a look. Yeah, there's the 80%, $80 positive, which is more or less the same as over there. So we know our base is correct, so we can go ahead and optimize just that setting to see if it adds any value. And we click on optimize and we start. Now this one shouldn't take long at all, so we could actually watch it happening. There we go. It's going to take exactly a minute to run those 16 options. And remember, we're trying to beat $80. So what it's saying is we take no action. That's the 0 option. We'll make $80. Let's see if it brings any better ones. So at 6 gaps, it's almost the same as the 80 at a gap of 6. But look how it's now dropping back. There we are. Here we've got an equal one at a gap of 10. Now we're starting to improve slightly by a few cents. Okay, so that adjustment hasn't really added much value. As you can see, the results remain around about 80. So let's have a look if there's anything else that can be tested. Then there's another one here called the maximum open ticket count. And what we can do there is we can actually also test that. So maximum open tickets, I'm just going to go run from 10 to, let's say 24, and let's see if that one adds any value. So I'm going to untick that, the first one. So we've unticked that one, and we're now going to run the maximum open trades adjustment, and let's have a look at if that adds any value. So I'm going to do, okay, let's go with that. So we go there and we say optimize, and we want to beat about $80. So it shouldn't take too long. Again, there should only be about 16 options. Yeah, 15 options. So let's have a look. So there we already have a better result. 95 is a better bill. 100 and, so this one is starting to produce better results. Okay, it's finished its optimization, and we have found a better result. Remember, the previous one was $80 positive. Now we are, and I'm going to put that as the input, we are now 140. And if I run this, I should get to the 131, I think it was. Look, 131, that's what we're looking for. And there's the 131 positive. So we've actually improved the profitability from by about 170 dollars. Now that's not going to save this particular one. If the Canadian keeps on trending down, which it looks like it is, it's not going to save this account, but it's added $170 more buffer to this particular account. And should the Canadian start going up, then certainly that will come in very handy. One final test that I'm going to do is we've found 131 as our best improvement. What I'm going to just double check it by running the every tick version of those settings, just to make sure that there's no major difference between the findings. Okay, the results of the tick testing has come out, and it's 114. It's not too different to what we saw earlier, so it still remains to be, let's have a look. I've just got the figures here, that there is about $160 benefit by using those settings that we've identified in the previous section. So it does help to analyze your failures so that you can find alternative ways of protecting yourself in trending markets. When the market starts trending, when you're using the grid trend multiplier, it is not possible to turn that into a profit. At best, you can use those settings that I've mentioned to protect yourself against excessive losses. Your best protection against excessive losses is still to build a big portfolio of EAs, where some of the really good performing EAs will compensate for the poor performing EAs. What you can also then do is you can eliminate some of these poor performing EAs by replacing them with possibly better settings or even better currency. So you can see the CAD has been really bad in it's 3 of the last 4 years, so clearly the CAD was a bad currency to select, and by eliminating the CAD out of this and choosing an alternative sideways currency, you could improve your portfolio performance. I hope you've got a few ideas from this video, and the important thing is that you should analyze your failures, see how you could have improved your results, and that would go a long way in the long run to help you develop a portfolio of robust trading EAs. So from me, Alex Deploy, cheerio.